there. Very good morning. You're watching Market Cafe right here on ET Now. I'm Kanishka Sarkar and with me is Ankita Saxena. Well, over the next 1 hour, we'll take you through all the domestic and global cues that you need to watch out for and also tell you about the stocks that you need to keep on your radar today. Well then, let's get started with an eye on the globe first. Now, let's take a look at how the US markets fared overnight. Now, the Wall Street, yet again, another record high. They closed, the major indices closed at fresh record highs overnight with all of them, all the three major indexes extending gains. The Dow first up ended about 0.14% higher. On the other hand, S&P 500 that rose 0.4% to that 6,693 level. That makes its third straight winning session. Whereas the tech-heavy Nasdaq index that jumped 0.7% to that 22,789 odd level. Now, momentum picked up after Nvidia surged nearly 4%, announcing a $100 billion investment in OpenAI to build data centers. That's reigniting the AI trade. But now questions remain on whether lofty valuations can sustain the rally. Looking ahead, investors await Friday's release of the Fed's preferred inflation gauge, that's the PCE index, for further policy cues. Meanwhile, there's political risk that's back in focus with the September 30th deadline for government funding that's looming and fears of a potential shutdown weighing on the sentiment. So that's about the US market, record high levels overnight, but lots of cues as well to watch out for. But moving on, Ankita, how are things on the crude front?
Absolutely, Kanishka. We did see another day of record high as far as the US markets is concerned, but oil prices inched lower. Now, prices settled marginally lower on Monday as concerns of an oversupply outweighed the geopolitical tensions in Russia and the Middle East. Now, as far as Brent crude is concerned, the future settled 11 cents or 0.2% lower to settle in at $66.57 a barrel, and the global benchmark has now traded between $65.50 and $69 since early August. WTI contract for October expiring on Monday closed down at $62.64 a barrel, down 4 cents or 0.1%. The more actively traded second month contract was down 12 cents or 0.2% at $62.28. Now, traders are back to focusing on possibly over-supplied global oil market that is soon to come unless the US and the European Union can agree on harsher tariffs on countries that purchase crude oil. And on the back of that, we do have oil that has settled in lower.
All right, so that's about oil and the US markets, how they fared overnight. But moving on, let's get you some top global stories that we're tracking at this hour. Now, first up, days after the Trump administration hiked H-1B visa fees to $100,000, the biggest tech giants are saying that immigration remains vital to America's future. Nvidia CEO Jensen Huang said that they want the brightest minds to come to the US, while OpenAI Sam Altman has called financial initiatives a good step. Both stress that the US needs the world's smartest people in the country to fuel innovation. Next up, hot on the heels of the Intel investment, Nvidia is all set to pump up $100 billion into OpenAI this time, powering a massive AI data center build-out. The project marks double of Nvidia's output from last year. Analysts say that it's a closed loop of investment and demand, with OpenAI surging user-based fueling chip needs. CEO Sam Altman sees major advances ahead, calling the infrastructure push unprecedented in scale.
And France has formally recognized the Palestinian state, prompting Australia, Britain, Canada and Portugal to follow suit. President Macron said the move is aimed at reviving peace efforts, even as Israel rages at the decision. UN Secretary General Antonio Guterres stressed Palestinian statehood is a right, not a reward. Israel, meanwhile, will boycott today's UN Secretary Council meeting on Gaza. And Disney says that Jimmy Kimmel Live will return today after a nearly a week-long suspension. The late-night show was pulled following Kimmel's controversial remarks linking activist Charlie Kirk's alleged killer to Donald Trump's MAGA movement. Now, Disney executives made the call after what the company described as thoughtful conversations with Kimmel.
Moving on, JP Morgan CEO Jamie Dimon is urging progress in US-India trade ties, telling the Times of India that he hopes Trump and Modi can strike a deal soon. Now, Diamond said that he'll be engaging policymakers on H-1B visas, which he noted came out of the blue. On tariffs, he called them modestly inflationary and little recessionary as well, though he stressed that he's firmly in the free trade camp except on national security. Diamond also praised India's economic reforms as excellent and a driver of optimism there.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more updates on the market. Stay tuned. Russian President Vladimir Putin announced that Moscow will voluntarily continue to observe the New START nuclear weapons treaty for one more year. Even after the expiration of the pact with the United States, Moscow said it expects to take a similar step from the U.S. Now, speaking at a meeting with members of Russia's Security Council, Putin said that the pact's termination would have negative consequences for global stability.
All right, then moving on, as Trump continues to exert pressure on India due to its trade with Russia, External Affairs Minister S. Jaishankar met with U.S. Secretary of State Marco Rubio in an apparent bid by both sides to repair relations, especially after the 50% tariffs on Indian goods and a hike on H-1B visa fee. Now, my colleague Sumita Karir has been tracking the developments since the very beginning. She's now joining us with the latest over here. Sumita, what is the latest that you're picking up from your sources?
Absolutely. In fact, if you look at the commentary that's been made by the U.S. administration, which essentially suggests that India is a relationship that the United States has, and this relationship is of critical importance. And Marco Rubio has reiterated that if you go by a readout that's been issued by the U.S. State Department, and as part of the conversation between the two sides, between Marco Rubio and External Affairs Minister Dr. S. Jaishankar, the conversation covered a range of bilateral issues of current concern. In fact, there were also talks on trade, energy, pharmaceuticals, and critical minerals. So these issues were discussed as well. And more importantly, India and the United States agreed on the importance of sustained engagement on progress on these key priority areas. So definitely, this is a positive signal that's coming in from the United States. Marco Rubio once again reiterating that this is a relationship that's important to the United States, that's of critical importance. Remember, this meeting is coming in even as India and the United States are negotiating a trade agreement. We do know that Commerce Minister Piyush Goyal is in Washington for trade talks. And a trade team from the United States visited India on 16 September, and positive discussions were held, and it was decided by both the sides to intensify efforts in this direction. However, we have to understand also the other side of this story, which essentially is the fact that despite the fact that there is a positive commentary coming in from the United States administration, if you look at the policies, they seem to be ramping up pressure on India. For instance, if you see the Chabahar port waiver, sanctions waiver that came about, that really impacts India, given the fact that one of the terminals that's being constructed at the Chabahar port is being constructed by India. Secondly, this policy related to U.S. increasing H-1B visa fee. So this is also something that's detrimental to India's interest, particularly in the technology and IT sectors. And we do know that there is restriction over oil tariffs. How will these issues really be resolved, even as we are sort of negotiating with the United States? And will there be any concessions that will be made by the United States, particularly with respect to its stance on oil tariffs, particularly with its stance on asking India for market access with respect to agri-Indian GM crops? That remains to be seen.
All right, Sumita, thank you so much for joining us on the phone line. But we'll move on and see how the Asian markets have opened up. Well, Asian markets are trading higher today. That's fueled by a tech rally on the Wall Street after Nvidia announced a partnership with OpenAI, driving investors' optimism about the future of artificial intelligence. And remember, of course, because of the H-1B visa announced by Donald Trump, Indian IT stocks are also going to remain in focus. Now, remember, Japanese markets are closed on account of a holiday, but the rest of the market, Asia-Pacific market, have opened in the green. We see Shanghai That's actually now trading, it's turned flat, but nonetheless holding out in the green, trading with gains of 0.05%. We have Kospi that's trading up 0.1%. Hang Seng is trading up 0.2%, and ASX S&P 200 that is trading flat as of now. Is trading nonetheless in the green with gains of 0.03%. So a little flattish moves coming in, but nonetheless these markets are holding out in the green, fueled by the tech rally that we saw coming in on Nasdaq, last night. So on the back of that, Asian markets have opened in the green, but Indian market, Nifty is implying a flat start, albeit in the red, with a shade of red, with cuts of 15 odd points, or 0.06% is the cut that we're expecting on Nifty. So very, very flat moves coming in as far as Indian market open is concerned.
Absolutely. A very muted start is what we are expecting for the Indian market. In fact, the Bachat Utsav failed to cheer the Indian market yesterday as well, as it ended on the lower side on the back of sharp cuts seen in the last leg of trading, bringing Nifty down to that 25,200 level. Meanwhile, broader markets mirrored benchmarks. My colleague Snehi is standing by to get us a roundup of all the market action yesterday.
Well, yes, absolutely tempered day of trade is what we've seen, and the Nifty ended just slightly off the day's low, mild recovery towards the market close, 25,202. So just barely above the 25,200 mark is where we've shut shop. Still a 0.5% cut coming in on the Nifty 50, similar cuts coming in on Sensex. You had Bank Nifty that did slightly better than the benchmarks, but nonetheless a 0.3% cut is what we've seen over there as well. The broader markets, that's where we were seeing some more pressure building in. The mid-cap was in tandem, slightly in tandem with the Nifty, a 0.6% cut over there. It was actually the smaller end of the market, the small cap, that was lower by more than 1%, and that trend reversal is being seen there, because remember, the last couple of trading sessions when the market did well, it was the small cap index that was leading the gains, and all of that has reversed. If you take a look at the top Nifty gainers and losers, first up on the gaining side, Adani Enterprises, a 4% uptick over there. There wasn't only Adani Enterprises, even from the non-Nifty group of stocks, the Adani basket of stocks did very, very well. Adani Power was locked in upper circuit, Adani Total, Adani Green Energy, all of them, including Adani Ports, they have done very well for themselves. So this was followed by Eternal, Bajaj Finance, Ultratech, Adani Ports, Bajaj Auto. These are some of your top Nifty 50 gainers. On the flip side, Tech Mahindra, TCS, Infosys, Wipro, HCL Tech, your top Nifty 50 losers, because the cuts that we saw on Nifty IT on the back of their H-1B visa fee, that continued to make the entire Nifty IT space mellow, a 3% cut on an intraday basis for Nifty IT alone, and this was followed by Cipla, Tata Motors, Trent, some of the other top Nifty 50 losers. Sectorally, it was the day of metal stocks. They did very well, held on to 0.5% gain because Hindustan Copper was up 5%. Media energy stocks, they continue to trade in the green, but some pressure other than ITU you had on pharma, FMCG, PSU banks, auto, bank and Nifty realty. Surprising for a day that the GST rate rationalization came into effect. Some of its biggest beneficiary sectors, they were deep in the red as well. Other than that, if you take a look at some individual stock-specific actions, Swiggy was in the red on the back of a JM Financial downgrade coming in. Voltas was under pressure on the back of weak management commentary coming in during their analyst meet. So these were some stocks that were in focus. Anant Raj on the flip side continued to do well on the GCC opportunity in India on the back of all of these IT jobs once again coming back home. You had other names like Netweb Tech on the back of an order win, Muthoot Finance, NBCC on the back of another order win, an MOU. They continue to do well in trade. So that was the roundup coming in. 25,202 is where we shut shop.
All right, so that's how we shut shop yesterday. But before we start trading today, let's get you all the lowdown on all the stocks that you need to watch out for and keep on your radar. For that, my colleague Shrishti Sharma is joining us. Shrishti, tell us, what are the stocks that you have picked out for us?
Well, yes, a lot of these counters will be in focus today. Firstly, let's have a look at what these auto counters will do in today's trading session, because we have the likes of Hyundai as well as Maruti Suzuki, where they have come out with their day one sales of GST rollout, and wherein they have recorded a stellar number. Firstly, when it comes to Hyundai, it's almost 11,000 dealer billings, the highest in the single year in the past 5 years performance is what the company has highlighted. And along with that, even Maruti Suzuki, They haven't seen such a phenomenon in the last 35 years is what they have highlighted. They have said that they have already recorded 80,000 inquiries on the day one, have already delivered 25,000 cars on day one, with deliveries expected to touch 30,000 in the near term as well. The response by the customers has been phenomenal, and they're very excited about the season going ahead. Along with that, some of these companies like H-1B Movers, Ace Construction, they will be in focus, as well as DGTR has recommended imposing anti-dumping duty on imports of cranes from China for the next 5 years, and that's indeed positive for the domestic companies from the likes of H-1B Movers as well as Ace Construction. Along with that, do look out for ABB India, CG Power, Siemens, TD Power and LT Equipment, because there's a positive news flow coming in here as well, because DGTR has recommended anti-dumping duty on Chinese electrical steel for 5 years. Do note that the green steel manufacturing is also about to start for the likes of companies Tata Steel as well as JSW Steel. And lastly, KFinTech, a clarification coming in by the company itself, wherein General Atlantic Group, which is categorized as a promoter and promoter group as of now, hasn't indicated any intention to sell their stake in the company, wherein there were some reports highlighting the same. In some of the reports we did see, and even the stock reacted, but the company has come out with a clarification that they are not aware about any such development. Back to you.
All right, thank you, Srishti, for taking us through all those details. Lots of stocks to watch out for in today's trading session. But which are the cues that we need to keep an eye out for? Snehi is here with just that list.
Well, there's lots of cues to watch out for, and it's Tuesday, which means it's the weekly Nifty expiry, so watch out for any volatility, especially the kind of trading session we've had on Monday. And other than that, HSBC manufacturing PMI numbers will be out. Now, the PMI data is not only out for our markets, you also have manufacturing and services PMI data from US, UK, Eurozone. So these are going to be some important metrics to watch out for, and crucial data all across the global markets. Other than that, if you take a look at what else is expected in terms of data from US, you have current account data. From Eurozone, you have these PMI numbers as well. The Japanese markets will be closed, so it's a truncated week coming in for Japan. In terms of global earnings, all eyes are going to be on Micron, but once again shifting focus back home, it's going to be the record date for the composite scheme of arrangement between Piramal Enterprises and Piramal Finance. That merger is going to be taking place. Sudarshan Chemical Quarter 1 earnings will be there, so watch out for that. Pidilite Industries will be trading ex-bonus in the ratio 1:1, so watch out for that as well. And you'll have a host of stocks that will be trading ex-bonus, the likes of India Glycols, Premier Explosives, Suntech Realty, Talbros and Tilak Nagar Industries. In terms of AGMs, watch out for Star Health, Techno Electric, ABFRL, Mastech, GIC, Good State Petronet, Campus Activewear and Dixon Tech. All of them will be conducting their AGMs as well. Now, in terms of the primary market, lots of new paper hitting the street. You have Euro Pratik Sales IPO that will be listing. So one IPO making its G-Street debut. Other than that, Jara Institute IPO will be opening. Solar World Energy Solutions IPO will be opening, along with Sesashai Technologies IPO and Anand Rathi Shares IPO. So, well, 4 IPOs opening, 1 listing as well as 2 closing. GK Energy IPO and Sattvic Green Energy IPO will be closing for subscription. It's going to be the last day to subscribe for these IPOs if you wish to do so. Lastly, in terms of other events, it's going to be the day 1 of the general debate and at the UN, that's the United Nations General Assembly in New York, and Donald Trump is also going to be speaking over there, and the OECD is going to be releasing its interim economic outlook report for the global economy. So watch out for all of these very important cues.
All right, a whole host of cues to watch out for before the start of D Street, but with that, it's time for us to slip into a short break. Don't go anywhere, we'll be back with more updates on the other side.
He's praised his workforce for maintaining operational momentum amid all the global scrutiny that happened. Let's listen into his comments.
Today, a cloud that had hung over us for more than 2 years has been lifted. SEBI comprehensive investigations has concluded by rejecting all allegations contained in the Hindenburg report from January 2023. It was your unwavering faith, your strength, and your belief in the company that sustained us throughout this period. This outcome belongs not only to the Adani Group, but also individually to each of you who stood by us, and for that support, I am deeply thankful.
And well, Diwali special Muhurat trading session will be held between 1:45 p.m. to 2:45 p.m. This time on October 21st, and the special 15-minute pre-opening session will take place from 1:30 p.m. to 1:45 p.m. All trades executed at this Diwali Muhurat trading session shall result in settlement obligations. The Indian market will be closed the next day as well, that is October 22nd.
All right, moving on. SEBI has issued a consultation paper on technical glitches in stockbrokers' trading systems. Ankur joins us now with the details on the same. Ankur, what are the details that you have picked up from this paper?
Yes, SEBI has issued a new consultation paper on the technical glitches in stockbrokers' trading system. Remember, this is not the first time that SEBI has issued these kind of norms. In 2022 as well, these norms were issued, but there was a feedback which was given by the industry regarding these norms, especially by small brokers, that they will have more compliance burden, and therefore now the definition of the technical glitch has been simplified, and this time, as per revised definition, this will exclude the post-trading hour issues, global service provider failures, as well as KYC process errors. All these things will be kept out of the purview of the definition of technical glitch, and more importantly, according to the new norms, 457 small brokers will be out of these norms, and therefore the idea of having the same rule for everyone does not apply here. The idea is to have an implementation by 1st of November, but within 2 hours there needs to be update given to the regulator as soon as technical glitch happens. By T+1 day, a preliminary report needs to be given, and within 14 days, a root cause analysis needs to be submitted to regulator if a glitch happens.
Moving on then, updates coming in from the IPO-bound PhonePe. The fintech giant saw 40% growth in FY25 revenue, rising 40% on a year-on-year basis to 7,115 crores. PhonePe continued to improve its bottom line, with adjusted EBITDA, including the ESOP costs, more than doubled to 1,477 crores. Now, the company also recorded a positive EBITDA, adjusted EBIT, excluding the ESOP costs for the first time. That is at 117 crore rupees. Now, these results were the reflection of PhonePe's diversifying offerings for consumers and merchants over the last couple of years. Additionally, with its entry into the loan distribution and stockbroking, adding to its existing payments and financial services suite. Now, the company also plans to file its DRHP later this year for a potential listing on the Indian exchanges, as recently reported in the media.
All right, moving on then to some macro data. Now, India's core sectors expand at the fastest pace in over a year. It's in fact at its highest level in 15 months. For the month of August, core sectors grew at 6.2% annually compared to 3.7% in July. Now, all the 8 sectors comprising steel, coal, cement, fertilizers, natural gas, petroleum, refinery products, crude oil and also electricity, they expanded. Now, the growth was led by steel, cement and coal. The steel sector grew the most at 14.2% year-on-year, while crude oil and natural gas were the only sectors to underperform.
And we also spoke to top market experts at JP Morgan on India's growth outlook going forward. Let's go across and listen in to understand their view on the key headwinds and tailwinds impacting the Indian economy.
Global equities have gone up, our valuations do not look as bad as they did. And more important is if you now split it into sectors, right? Let's take the financials cohort. Our banks, even in a slowing economy, will still deliver a certain degree of earnings growth with a high degree of confidence for the next 3 years. Shorter-term returns are made on earnings surprises, not growth. We've done a lot of quant work on this. And if you're an investor for 12 months or less, you are looking for companies that are going to beat expectations of growth. Right now, that appears difficult as well because, yes, things have gotten right size on the forecast, but do I have enough momentum for a large set of companies to surprise me on earnings? I don't see that yet.
India has been running on essentially two engines of growth, which is services exports built up by the global capability centers and infrastructure. Corporate investment as a share of GDP has been flatlining since 2012 at 12%. We need to really actually find alternative engines of growth. And the corporate sector is, flatlining at 12% is because there are no alternative. We haven't identified alternative sources of growth.
All right, then, that's the latest word coming on the economy. But in fact, we also had visuals of Finance Minister Nirmala Sitharaman visiting the shops in Delhi's Lakshmi Nagar to get the first-hand reaction of consumers and shopkeepers as the GST Bachat Utsav commenced yesterday, marking the nationwide rollout of the next-gen GST reforms. The shopkeepers could be seen thanking the Finance Minister for the relief to customers because of the GST rate cuts, as the Finance Minister thanked them for their feedback. Now, the Finance Minister also encouraged everyone to buy and sell made-in-India Swadeshi products, echoing Prime Minister Narendra Modi's call to embrace Swadeshi in our daily lives. Earlier today, the Prime Minister has also interacted with traders and entrepreneurs in Itanagar as the GST rate cut came into effect.
And while the Consumer Affairs Minister hails the next generation GST reforms in an exclusive chat with ET Now, Prahlad Joshi says from majority of food items to renewable equipment, every industry is poised to benefit and they are keeping a close watch. Let's listen in.
कॉफी के लिए बेंगलुरु में अगर 100 रुपए का कॉफी है तो 20 रुपए टैक्स देना पड़ता था. आज से वो 20 रुपए चले गए. देयर इज नो 20 रुपए. देयर इज नो 20 रुपीस टैक्स. मैं दक्षिण भारत से आता हूं, मैं डोसा खाता हूं तो मुझे 20% देना पड़ता था. 100 रुपए का डोसा है तो 20 रुपए का टैक्स था, वो जीरो हो गया है. ऑल इंडियन ब्रेड्स आर जीरो. मेजॉरिटी ऑफ फूड आइटम्स आइदर जीरो और 5%. तो yesterday कर्नाटका मिल्क फेडरेशन हैज गिवन एडवर्टाइजमेंट 40 रुपीस. उनका जो घी का है वो 40 रुपीस कम हुआ है. दिस इज द बिगेस्ट एवर गिफ्ट to the people of this country by Prime Minister Shri Modi. After taking over as the Prime Minister, many reforms under the leadership of Prime Minister it is done. I can say the reforms began only after Modi took over. I think ये सब रिफॉर्म का अगर इसके बाप कोई है तो ये जीएसटी.
लेकिन इसको हाउ डू यू मॉनिटर दिस? हाउ डू यू मॉनिटर द?
We are monitoring. We have established a helpline and in the Consumer Affairs Department also where the consumer related items are there. अगर उधर कोई इसका लाभ गरीबों को पहुंचा नहीं रहे तो हम इसका मॉनिटर जरूर करेंगे.
All right, so that's the latest coming from the Consumer Affairs Minister. But moving on, the next gen GST reforms are transformational. That's the word coming from ITC CMD Sanjeev Puri. We had an exclusive interaction with him, and he also added that this move will boost consumption, employment, and also drive economic growth. Let's listen into his comments.
Transformative reform. It's going to make good quality products accessible. Prices will go down. For every consumer, there will be a lot of savings for consumers. I think we should all celebrate that. And it's also, backed up by simplification that will improve the ease of doing business. And at ITC, we are all committed to passing on all the benefits to the consumer.
Sir, can GST 2.2 spark a new cycle of demand in the economy?
Yes, absolutely. It's going to fuel consumption and therefore investments and leading to employment. So it's going to set in place a virtuous cycle.
It's a start of the festive season as well. So how this move is going to positively impacting the overall demand side?
It will be very positive. It will be very positive, and I congratulate the Honorable Prime Minister for his vision and direction to get this being done, because it's truly transformative and it's going to have very significant positive impact on the economy.
All right, it's time for a quick breather. Don't go anywhere. More updates on the other side.
As well, and Maruti Suzuki has come out with a number saying that they haven't seen such a response in the last 35 years. That's very surprising, and they've also said that on the very first day they have recorded 80,000 inquiries and have already delivered 25,000 cars. The deliveries are expected to touch 30,000 shortly, and along with that they have also received 75,000 bookings on the day of the additional reduction announcements, because do remember, it was not just the difference of from 28 to 18% is what the company planned to pass on, but for some of the smaller vehicles the discounts were as high as 24%. And that's what getting the excitement back in the small car segment. Along with that, the company is also saying that nearly 15,000 bookings are coming every day. That is 50% higher than usual post the price reduction announcement, and the demand for small cars especially, that remains to be quite very high. The inquiries are very healthy as of now, and that's compared to last year. The overall response is exceptionally strong is what the company is highlighting. And along with that, even Hyundai Motors has come out with the announcement saying that just on the day one, they have recorded 11,000 dealer billings. That's one of their highest single-day performance in the last 5 years. And along with that, they're also saying that this is a clear testament of a robust festival sentiment and consumer confidence. And going ahead, they are anticipating sustained festive demand as well. So both the auto majors have come out with a very stellar booking numbers just on the day one, and they continue to be optimistic on the bookings and the inquiries going ahead.
All right, that's a bumper Navratri that's expected for the automakers, especially with the GST bonanza. But let's move on then. As global asset continues to rally, Indian valuations look relatively fair, says Sanjay Mukim of JP Morgan. He remains bullish on discretionary and financials on the back of the recent norms push. Let's listen in.
Well, the discretionary, as a broader sort of category, does intuitively have greater elasticity to price cuts, right? More than, let's say, staples, and probably far more than commodities. And I agree, which is the market is also reasonably rational. Now, whether it is two-wheelers, whether it is entry-level cars, that's the debate we will have now. But a discretionary cohort is conceptually more, let's say, or stands to gain more from the price cuts that we expect will happen.
So the consumption theme would be broken down into, where is it coming from, right? Either at the base level, which is the entry levels for many of them, or premiumization. And we saw that in the last 12 to 18 months, sachetization of premium brands which is coming in. So do you see that kind of trend to continue, or you're going to see some base level consumption now coming in because of the kind of money which is there?
The hope is for the latter, and I'll tell you why. Because it's not just the cut in GST. You also have to look at the impact of the reduced borrowing costs as rates have come down, and the tax cuts that were implemented in February. So if you add up all of these three and look at the monthly EMI payments for an entry-level car, that's actually come off quite a bit. So you could sort of argue that the affordability of an entry-level car has been pulled up by a year or two. Okay, and that's a meaningful change for a household that was on the edge, that was debating, okay, look, should I borrow some and should I start to, buy my first car? And there is an argument that these changes will tip it over.
Because the inflation that happened in the last 12 to 18 months have eaten into the savings of households. And now this cuts, whether it's a tax cut, an RBI rate cut which has brought down EMI, or now the GST cut, is bringing in that buffer for them. So is the household now going to invest into consumption or into capital markets, or going to put the money into bank FDs?
So I'll refer to RBI consumer sentiment data. Right now, this is soft data, and it's based on a smallish sample, but I find it very instructive. So what the urban consumer sentiment data says is that household sentiment, which was, let's say, 100 pre-COVID, fell to 60 during the lockdowns, went back to 100 in the reopening, and then fell down to 96 or 97. That subsequent collapse is what caught all of us off guard. So why has that happened? Sentiment on incomes is flat, which we can all relate to, right? Job post-reopening, there hasn't been that much of wage growth or income growth. Cost of living has gone up. This is the RBI data again. And cost of living includes your rentals, the school fees, healthcare costs. The inflation, but it doesn't include the consumption cost of living. It's your basic cost of living goods. And as a result, the ability of people to spend on non-essential goods is now subpar. So the weakness in consumer spending is essentially weakness in non-essential spending. Okay, so our argument, therefore, is that when the government provides this kind of a stimulus, multi-pronged really, it is that variable which should start to move up. The pressure on a household's budget was that we were tightening our belts. So now that I have a little bit of relief, that area should ideally see a bit of an up.
Foreign investors as a whole, they've been selling for last couple of quarters there. But it's been supported by the domestic investors who've been buying on a daily basis. In fact, they are outsmarting them in terms of buying. And, the reason was that India is overvalued or richly valued at that point in time. The valuation is almost remained the same. The earnings have come up a bit there, but we're still richly valued in that sense. So how is the foreign investors now looking at it? They expected a correction in the valuation to come back into the market, and that's not coming.
The relative valuations have gotten better. That's the point I was making. Because global equities have gone up, our valuations do not look as bad as they did. And more important is if you now split it into sectors, right? Let's take the financials cohort. Our banks, even in a slowing economy, will still deliver a certain degree of earnings growth with a high degree of confidence for the next 3 years. But look at what's happened to global financial multiples. All global banks have been on a secular rally this year. And if you look at India financials premium to global financials, it's actually come off quite a bit, right? So in contrast to what's happening in the rest of the world, our valuations do not look as prohibitive as they were, let's say, early 2024.
So as an investor, if you were to make a portfolio fresh based on this premise about, the domestic story being so strong on India and lesser reliance on export-oriented economies, what should be my biggest sector, overweights and underweights?
So let me answer that question two ways, right? If you're a 3 to 5 year investor, you look for compounding growth, right?
Sure.
The growth expectations will need to be watered down a little bit, right? One, because the economy itself is a little bit slower. Just take the stark contrast in nominal GDP growth. It was north of 20% FY23. It's now probably going to be 8%. And there isn't a view that this 8 is going to 12 in a rush. It probably goes to 9 or 10 over the next 3 years. But we are in a more subdued economic growth activity, which will therefore dampen the earnings growth and therefore possibly equity returns. The other argument we make is that shorter term returns are made on earnings surprises, not growth. We've done a lot of quant work on this. And if you're an investor for 12 months or less, you are looking for companies that are going to beat expectations of growth. Right now, that appears difficult as well, because yes, things have gotten right sized on the forecast, but do I have enough momentum for a large set of companies to surprise me on earnings? I don't see that yet. So my suggestion is, it is still a better asset to own in the India context, especially given the tax structure that we have locally, but do not expect a high double-digit compound.
All right, so that's the latest word coming from Sanjay Mukim of JP Morgan. But on that note, it's a wrap on this edition of Market Cafe. We are completely timed out. Ankita and I will take your leave, but don't go anywhere as the market will take all the action forward.
15 years at the front line of India's policy and power. On the ground, in the corridors, behind every crucial decision. He's there where the story begins. From policy talks to parliamentary debates, every fact checked. 15 years of decoding the government's mind. Because policy is the blueprint